Well, holy smokes, guys, we got some upgrades and downgrades going on out there. Welcome to the Financial Education channel. I am Jeremy. If you are new here, I want to talk about 3 stocks in particular today that have been upgraded or downgraded within the last 24 hours. One being Boeing stock. We know Boeing's in a bad situation right now. We want to talk about Apple stock, which got upgraded. We want to talk about Facebook stock, which got upgraded. Now, Facebook and Apple, I do own those companies. Boeing, I do not own them. So I just want to kind of read what these analysts upgraded and downgraded them, and I want to kind of give my personal opinion on these stocks. So I hope you guys enjoy this as always. All right, let's get into this. Smash that thumbs up button. Edward Jones is downgrading Boeing to hold from buy. We are downgrading shares of Boeing to a hold from a buy. 2 recent accidents have raised some concerns about a specific model of the 737 MAX. We know that Boeing is focused on safety and is working with the appropriate agencies to identify the issues. In our opinion, the accidents may result in additional expense and some delays in orders, which from a business perspective could pressure financial results. Longer term, we believe the outlook is balanced by the backlog of other planes such as the 787, recent defense program wins, and the expansion of the services business. Overall, we believe shares are appropriately valued for long-term investors, but needless to say, once again, they lowered it to a hold from a buy. Now, obviously, Boeing, I'm getting a lot of questions about Boeing, whether it be in my private stock group, link down there in the description, by the way, if you're interested in joining, or just from people like in the comment section and whatnot. I saw a lot of comments yesterday about like my opinion on Boeing stock. And my opinion on Boeing stock is it's a company that has a big valuation on it. It fell a bunch more today, but still it's a company that has around a $200 billion market cap on it. And it's a company that is in a real pickle right now. They're in a bad situation where we don't know if their planes are really to blame for those 2 accidents over the past, 6 months or whatnot. So if it is, that could be a ton more cost in there. We see a lot of airlines around the world basically saying we're taking those Boeings actually out of our fleets right now. We're not going to fly them right now. And so obviously this is a big risk to Boeing stock overall and Boeing the company. So in my opinion, for me personally, it's not a company worth touching at this particular time. It's not a company that has so much upside potential that I'm looking at and I'm like, wow, they have so much upside that here it looks cheap or something like that. And I've gotten in stocks in the past that have had things going on with them. I've gotten Facebook last year when the whole Cambridge Analytica stuff came out and all that started going and all the negativity around Facebook. I said there's so much upside in Facebook that it was worth me starting to buy, and I started to buy shares obviously. In Boeing, I look at this stock and I'm like, it's not a stock I want to be part of. That's the bottom line with this. Not a stock I want to be part of. So that's kind of my opinion on Boeing. It's just not the upside potential there in my opinion, and there's still more downside risk in my personal opinion to this stock overall. Especially, it could get really ugly, could get a lot worse before it gets better. Just keep that in mind, all right? Apple. So Apple investors are too pessimistic about its hardware and its stock, an analyst says, all right? Mohan's Monday note included a number of reasons he thinks Apple shares can rise roughly 17% from current levels, including over bearishness about the hardware business. Ongoing questions about the US-China trade and demand from the crucial Asian market, as well as concerns about hardware feature upgrades, still linger, Mohan wrote. He lowered his fiscal 2020 iPhone unit sales estimate to 190 million from 200 million, but he boosted his 2021 outlook to 220 million from 215 million, citing upgrades in the connection with 5G networks. As we know, the 5G iPhone should be out around that time. I expect the 5G iPhone to come out in the fall of 2020, so which means 2021 units should be very high. I think that's when an iPhone will really get back to big growth. I wouldn't expect, obviously this year we're in, or next year to really be growth years, kind of like I would expect almost like next year to kind of be stagnant compared to whatever, we do this year. But in 2021 moving forward, I think we're going to have a mass upgrade in not just iPhones, but smartphones in general. People that have been holding out for years and years are kind of waiting for that 5G because the speeds and whatnot and what you can do on 5G. It's just a whole different ball game there, okay? It says their current stock price of $173 suggests that the market is discounting a negative growth scenario for hardware and for services, Mohan wrote. We view this as too pessimistic, and our price objective of $210 is more in line with a scenario that assumes a flat hardware revenues and mid-teens year-over-year growth in services. That's the thing with Apple stock. It's not just about this iPhone story. Obviously, iPhone dominates a lot of their revenues, but services continues to be an absolute growth beast. And even if iPhone units don't grow this year or next year, which they probably won't, that still puts services in a situation where services can still grow plenty. Okay, services can still grow, anywhere from 10 to 20% for at least the next 2+ years, even if iPhone revenues do not grow. That's the magical thing about that, because services is just a recurring revenue stream. People keep spending money. Someone like myself that signed up for Apple Music, for instance, guess what? I keep paying into Apple Music each and every month. They keep making money. I'm on the Apple Cloud or whatever. I keep paying into that each month, and that's just a great thing, obviously, for Apple, because these are just recurring revenue streams from folks. And I mean, any apps you have or movies you buy or songs you buy or albums or anything like that across the board, Apple's making money from all that. And even things like battery upgrades and whatnot, they're making money from that. And something he didn't even really touch on was wearables. The AirPods have absolutely taken off and become like something like almost everybody wants now. At first, the people were like, what the heck are those? And now I see it in like every kid out there at a college campus now wants a pair of AirPods or has a pair of AirPods. Apple Watch sales are absolutely taken off. So the wearables is another growth story for them. And then I just think iPhone won't grow until 5G comes out, and then it's going to start to become a growth beast once again, okay? Obviously, Apple is our best position in terms of percent. We bought that in January, and we're already up over 25% on the Apple shares. Unfortunately, I only bought $5,000 worth when I bought. I'm kind of regretting that. I wish I would have bought a lot heavier, but that can always be said. What's interesting is back when I put out that video why I finally bought Apple stock, a lot of people were like, oh, that's such a dumb investment. You're going to lose money. I don't know if it's just Apple haters in general or people really thought I would lose money on that stock. And the best part is that stock's not done going up. This stock will go up a lot more over the coming years, especially once iPhone gets back to growth. So just, people have their opinions, and that's fine, okay? Now let's talk about Facebook stock. So Facebook is being upgraded to a buy from a neutral. Nomura said to expect positive revisions throughout the year, given management's original commentary that the operating margins would trend toward the mid-30% range over the next several years. And considering guidance for 2019 expense growth essentially equates to 35 to 36%. Operating margins right out of the gate, we believe the expense growth outlook may be tempered as we progress throughout the year. While we're not baking it into any improvement for 2019, we assume 2020 operating margins are 100 basis points better than the prior model and reach 35% in 2021. Regulation likely makes Facebook stronger. We continue to believe that increased regulation will be a net positive for large platforms like Facebook, though there could be some headline risk in the near to medium term. On the whole, we do think the negative headline headwinds have largely been exhausted with little reaction to negative press as of late. Okay, two things I want to touch on in regards to Facebook. Obviously, you guys know I love Facebook long term. That's my actually biggest position and whatnot. I don't want to really get into that, okay? But two things, okay? One is people think regulations hurt big businesses, all right? They think regulation, they think, oh, yeah, hurt those big businesses. Well, a lot of times actually, when you have more and more regulations come in, a lot of times it actually hurts the small businesses or the people trying to come in and compete because there are a ton more legal costs, there are a ton more compliance costs that have to go with it. A company like Facebook or Google, these massive companies, if they have to spend an extra $10 million or $100 million on legal fees and whatnot for, keeping up with all the regulations, it's nothing to them. However, if you're a mid-sized business is trying to become a big business, and that 10 million or 100 million could be, basically what makes or breaks you in the end, okay? So the regulation part, I think it's funny that everybody thinks, oh yeah, they're going to hurt Google so bad, they're going to hurt Amazon, they're going to hurt Facebook. I'm looking at it and I'm like, a lot of times that actually helps them protect the big businesses long term. It's just unfortunately how it works, okay? Second part I want to bring out is around the negative headlines in relation to with Facebook. And I talked about this a lot in late 2018 when I was buying Facebook stock heavy. I talked about how Facebook stock and Facebook the company was basically right around the center of a hurricane, okay? Right around the center of the hurricane is the most violent, right when you're outside of that middle part there. It's so violent in that part, and that's where Facebook has just been for the last couple years. And what I felt is the hurricane's now moving further and further away, and now there's been so much thrown at Facebook over the last few years, so many negative headlines around Facebook, and just everybody that's a media outlet throwing so much negativity at Facebook. Oh, Facebook's bad for this or that. Now, all of a sudden, now they get at the point where if you're trying to sling mud at Facebook anymore, it just slides right off them, because there's been so much that's been in people's minds already that it's just like, at this point, there's no more mud you can sling at it, okay? There's no more mud you can sling at it that will stick to Facebook now. There's just, everything's been out there, and people are going to judge Facebook and Facebook's products, and they either judge it as, oh, we'll use it, or we won't use it. There's nothing else that you can really throw at Facebook at this particular time that's going to hurt the stock. And we've seen it where publications will try to come out and write negative articles about Facebook. And a year or two ago, that would hurt Facebook stock. And now at this particular time, it's at a point where it just doesn't even hurt the stock anymore, because people understand there's so much growth left in that company, and there's so much business moat around that company. Like, it's so hard to just start a social media company that gets 1 billion plus people on it, or even hundreds of millions. It's so unrealistic. Like, why have we not seen that, right? Snapchat's been the closest thing we could call to a competitor of Facebook or Instagram, and Snapchat is just a little tiny thing compared to Facebook and Instagram, right? And that's the closest thing we can call to a competitor over the last 5+ years. So it's just really hard to build those type of businesses. Facebook continues to be the company that everybody wants to stick ad money to. Ad rates will continue to increase over time, and it's just a fulfilling prophecy that the stock is going to go up and up and up over the coming years. And all this regulation and whatnot, it's ultimately, it will help the big businesses longer term. Short term, it provides a little bit of risk. Everybody writes some scary articles, but in Facebook's case, at this point in time, you can't sling any more mud at it, guys. That's just kind of the situation there. But I want to hear your guys' opinion about Boeing, Apple, Facebook. Do you like those stocks? Do you not like those stocks? Or what is your opinion out there? I'd love to hear from you guys, as always, in that comment section. Thank you for watching, and have a great day.